here's Phil.
And good afternoon. Welcome to my podcast. Thank you for joining us. It's amazing, isn't it, the BS they throw at us? Listen to what they're saying here. This really just grinds me. About fundamentals.
Yeah, so there's a lot of angst around, bubbles and potential, overvaluation in technology. We don't see it that way. We think that these levels of valuation are very well anchored by very strong fundamentals.
That's just not true. It's a bull-faced lie. It's not true. We're also going to talk about how they're telling us how great the consumer is. I got some numbers for you. In fact, that's not true. And also, we're going to talk about the rotation. They're trying to rotate back to the tech stocks. Why that's not going to work. But first, let's talk about this. These TV jibber jabbers are trying to take parking space in our head, thinking we just sit on the world's longest stupid bench. And they're saying that if you have strong fundamentals, it justifies these stretched valuations and is extremely high prices. What are they, nuts? I've been in this business a very long time, over 50 years. That is so false. And I'll prove it. I mean, this is crazy. So, fundamentals? Are you kidding me? That justifies stretched valuations? Now remember, a stock like NVIDIA, now that can be a great company. It is a great company. It's in a great industry. It's got great growth. We all agree with that. However, it still can have a bad price. It's just too high. And this is what they won't tell you. I mean, this is nuts. Now, the other thing is bubbles. Do you remember? Every bubble has strong fundamentals behind it. There's no question. Every bubble. Let's go back and take a look. If you look at, let's say we look at the tulip stock bubble. That was back in, 1637. The railroad bubble in the 1800s. By the way, it's always different. Everything's different this time. When you hear that, oh, it's different this time, run like hell. Now, AI companies, we're not arguing. They have real earnings, real demand, real growth. We know that. But they're still overpriced. And let's just go back to what happened in 1999 with Cisco. Let's look at Intel. Let's look at Microsoft. They're all real companies. No question about that. Now let's push our way up to 2021. Tesla, ARC. These are all real companies. But again, they have extreme valuations, prices too high. And fundamentals don't change any of that. And when you keep hearing how fundamentals are going to change that and protect it, go out and buy these AI stocks. And AI stocks, are you kidding, with the debt they're starting to carry? They're having trouble. You had to be in these AI stocks early. If you're a buy and hold, or you're an investor, you want to hold a long time, you had to be in these long ago. Or you're going to end up like a FOMO. Fear of missing out, you always buy right at the peak. And that's the problem. That's what we see that's going on. Now, then they tell us how the consumer is so strong. What? Consumer strong? And that they're spending? What are they, nuts? What they're masking is that the top 20%, the affluent, is carrying the spending and masking the weakness in the bottom 80%. They're masking that. Consumer spending has fallen from 5.7% in 2024 to 3.7% today. That's a fact. And it's estimated to drop again in 2026. That's a major deceleration. What are you, nuts? That's major. A strong consumer accelerates the spending. They don't decelerate their spending, but that's what we're seeing. And what they don't talk about is that not only has the spending been cooling, and cooling more among the lower and middle class, but all this inflation, that's not cooling. The labor market is not cooling, even though they tell you they are. It's not. Now, the other thing they won't be truthful with is, what are they spending on? They never mention they're only spending on essentials, non-discretionary, like housing, groceries, transportation, healthcare. That's where they're spending. Remember, to have a good economy, you want them to spend on non-discretionary stuff. Discretionary stuff that they don't need. A good economy is when people spend money on what they don't really need. Appliances, new furniture set, big screen TV. That's what produces in this country. That's what gives us productivity. Remember, this country is based on production.
5 minutes.
And in order to have a good economy, you want to be producing items that are discretionary. And remember, our automobile industry, we have 170 million people that are working. But the automobile industry, everything, that'll take care of more. No, they only, out of that whole 170 million, they're about 10 million. That's it. 10 million. So consumer sentiment and consumer confidence is falling off a cliff. How come they're not talking about that? I mean, everything is always rosy with these people. And then when something happens, oh my God, they go on these financial shows, oh, we knew that. Yeah, and then they have a special break, the market's crashing. We're going to bring in our experts who told us this was going to happen. What? Yeah, right. The consumer is not strong. If the consumer was, they would not be so stretched. They're only spending on what they need: food, health care, gasoline. That's all they're spending on. And 73% of the consumers are saying when they were asked that and the consumer can tell you better than any of these guys on Wall Street, better than any of these guys on CNBC. The consumer, 73% in the report, just said that they expect the grocery prices are going to go up, not down. They're not strong. If they were, why are they buying just essentials? Why are they walking away from the big screen TV? See, it doesn't work like that. And everybody's worried now about the inflation accelerating again, because remember, this $40 billion that he's borrowing, he's printing every month for his QE that he doesn't call QE. That's going to cause massive inflation. He may have to raise the rates again, the short-term rate again. But he's not talking about that, is he? And you know what really gets my goat is when they talk about, they make it so dramatic. Did you know in 2026, Trump's got a problem. He's got $9 trillion in debt that he has to take care of, the national debt. He's got to pay down $9 trillion. He's in deep trouble. We better get rid of him. $9 trillion, how's he going to do that? We're going to default. We got to impeach him. What? What a bunch of BS that is. They make it so dramatic. We never pay our debt. We only roll it over. When was the last time we ever paid our debt? America, the United States, never pays its debt. It's rolled over. It's like going to the bank and saying, here's all my debt I got with you. Now, can we take, and let's just forget about it? Let's just cancel it out. And can we just start over again? And every year when it comes due, I owe you $50,000 every year when it comes due. We'll do the same thing. We'll just pretend it wasn't ever there, and we'll start a new note. And we'll do that each year until I die. That's what Congress has set up for the government to do. Anybody that tells you they're never going to meet their debt, they don't know how the government works. Of course they're going to meet that debt. Just like their bank reserves. Oh, the bank reserves, right? They're below the $3 trillion, we're going to be in trouble. No.
30 seconds.
What do? Paul just goes over and sells some T-bills, that's all. He just sells some T-bills. I mean, the government never pays its debt. Never has, never will. It always keeps rolling it over. And that's why the government doesn't care. That's why Congress doesn't care. Congress set it up so the government would never have to pay us that. Wouldn't that be nice? If we could do that too? We'll talk more about that when we get back, and the stock market.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When making wise investment decisions, Phil Grandy has some sound reasons you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back. So, the government never has to pay back its debt. Wouldn't that be wonderful? When January comes, Trump says, to make America great again, here's what I'm going to do. Households, every household, we're going to give you a government credit card. And we're going to put on your credit card all your debt. And each year, when it's due, you don't have to pay it. And as long as you just pay the interest on that credit card, this government credit card, put all your debt on, every bit of debt you have, you only have to pay interest. As long as you pay interest for the rest of your life, you never have to pay that debt. We'll just roll it over each year. Imagine going to a bank and saying to a bank, gee, you know that note I got with you, the $100,000 note? Why don't we just forget? Let's pretend It never was. Just get rid of it. And let's just write a new one, start from the beginning again. And let's just do that every year is due. That's exactly what the government does. And listen to this stuff here. And again, it drives me crazy.
And the big six banks continues to say that the consumer is strong, resilient. They all use that word, Joe. And the consumer continues to spend because they have jobs. Yes, the labor market is slowing, but they have jobs and inflation has come down and they have wage growth in the mid single digits. So things are still pretty good.
So things are still pretty good, but all they're buying is essentials. They're buying non-discretionary, housing, rent, groceries, health care. When you have discretionary spending tanking, you don't have a strong economy. Economies are based on productivity. As long as you have good production, you'll have good sales, you have good economic growth, you have good jobs, good wages. We don't have that. But they're trying to make this like, oh boy, everything's just great. And then when you listen to this guy, Jamie Dimon, remember him?
In the short run, it looks like the American consumer is doing fine, is chugging along, companies are making profits, stock markets are high, and that could easily continue.
Now that's continue. This is amazing to me, isn't it? I mean, and here's the thing why the government is so spoiled. I can't think of another word. Why they spend and spend and spend, and we get killed with the inflation. Because just think about it. The system that they put in place is pretty neat. I wish they would do that for us. The money market funds. Now, people buy money market funds and they think nothing of it. But if it wasn't for money market funds, we would not have a solvent government. We would not have solvent banks. We would not have solvent corporations. Think of what they set up. So on one side, the government doesn't have to ever pay back their debt. At the end of each year, or like this $9 trillion, they're just going to pretend it never happened. They call it rollover. And then they write a new $9 trillion in debt. Then when that comes due next year, same thing. They don't have to pay it off. They don't have to pay it. They just pretend, we never had that note, let's start a new one. Boy, I wish we could do that. But going back to our government, think about it. Every day the government has to meet expenses, Medicare, Medicaid, Social Security, daily expenses. And they don't have the money because they spend more money than they take in, and they keep borrowing because they know they never have to pay it back. But with money market funds, all they have to do, the Treasury Department, create a T-bill, walk over to the money market, and to go to the money market funds, and they'll buy those T-bills. And now you got enough money. Oh, no problem there. And same thing with when you have banks. Oh my God, the banks are in trouble. They don't have enough cash. Oh, okay. Well, all they have to do is sell CDs. Just go over to the money market window. Here, I'm going to sell you some CDs. Oh, their problem solved too. Wow, must be nice, huh? Corporations, they're in deep trouble because they've been paying 0 interest, 1% interest on $14 trillion in debt. They've been doing this for years now. Now they got to pay 5 to 8%. They're in trouble. They don't have the money to do it. So what are they going to do? Oh, just take some of their commercial paper, walk over to the money market. Here, I'll sell you this. Oh, I got money. I mean, this is nuts. This is exactly how it works. So if it wasn't for your money market funds, we wouldn't have solvency. Remember, anyone that tells you our banks are solvent, they're lying right to your face. They're not solvent. The banks have never been solvent since the day of in 2008 when they went bust. They never became solvent since that day. Never. This is how they prop them up. This is how they prop them up, the banks. So it's crazy. So let's take a look at what's going on with, now, if everyone's talking about the AI. Well, AI is in deep trouble. And because it's a massive amount of money they're borrowing with no returns. We're hearing that every day. So is there going to be a rotation or is there not going to be a rotation? Well, we take a look. Let's go and take a look at what's going on. If you look at our gold stocks, okay, our mining stocks especially, we've been doing terrific with our gold stocks, our mining stocks. And so look at our GDX, just going straight up, going up again today because people are fearful. They're fearful. They know what's going on. They don't listen to this crap. Consumer sentiment and consumer confidence are in the toilet. Why do you think all the central banks around the world are buying gold? And what you want to buy is the miners who got to go and dig that gold out. Those are real companies. Those are real earnings. Those are real balance sheets. They're doing terrific. Silver went up again today. Look at that. So why would you be sitting in? So the thing you got to understand is, why would you be sitting in a tech stock? It makes no sense. But all the tech stocks are starting to go back up. People are addicted to them. Let's take NVIDIA. Look at today. You have the tourists coming in, don't know what they're doing. They're buying. The FOMOs are buying. Are you kidding me? The stock is underneath support. The stock on my chart, we designed ourselves, showing heavy selling still coming in. So you have these tourists jumping in because they can't stand it anymore. So they're switching out of the discretionary stocks, is what they're doing, right? So if you look at, for example, today, Las Vegas Sands, it didn't go down much. It went down a little bit. But then take a look at NVIDIA, that's going up. Take a look at Microsoft, that's going up today. The MAG's gone up today. So everything's going back up, going up. But it's stuff that you would never go in to buy as an investment because there's too much selling going on. The trends are wrong. Most of it is short covering rallies. And the people that are jumping in there when they see it go up are the wrong people. They're not our institutions, our heavy buyers. The institutions are gone now till after the first of the year. So volume's light. So that if you're going to go in and you're going to buy these tech stocks, you do it now. But again, remember, they're going to give it all back at some point. So you got to know when to get out. You got to know when to short. But the rotation that we're having now, and you look at it, it's clear. Target, Walmart, okay, these are all doing good. Southwest Airlines, okay, Delta Airlines, MGM, they were all doing good. The banks were all doing good. People got smart. They started to go into the banks. They started to buy Goldman Sachs. They started to buy J.P. Morgan. They started to buy Morgan Stanley. Look at them. But now those are pulling back. So the banks are starting to pull back. The metals are strong out of fear. Discretionary stocks, okay, these guys here, most of them, there's a few going up, not many. Most of them are going down, or most are just going nowhere because everybody's pulling their money out. Okay, they're rotating back to these tech stocks, AI stocks. The problem with the AI stocks is you got real valuations problems. You got real problems with AI stocks. I mean, and people have no idea what's going on with them. The valuations are insane. The valuations are insane, and the debt's insane. The debt's crazy. So we're starting to see, again, all these people, okay, that don't know what they're doing jumping back into these things. Unbelievable. In the last couple of days, we've seen them rally, pull back, rally, pull back. Think about this. Oracle needs to raise $38 billion in debt just to build their data center. And take a look at Oracle on your chart. Here, I'll put it up for you. Take a look at Oracle. Let's take a look at it. So you put up Oracle. Popping up right there for you now, Oracle. And look at this. But someone's going to look at it and say, oh, it's going up today. Get me in, hurry up, get me in before it goes higher. Get me in. It's in a severe downtrend. It's underneath all three supports. Oracle needs to raise $38 billion just to build a data center. The increase in AI debt in just 12 months went from $15 billion to $125 billion. So I look today and I say, oh, what the hell are they doing here? Oh, somebody bought NVIDIA today. What are they, nuts? It's underneath two moving averages. You got more sellers than buyers in the last. All you have to do is look at so hard. It's not hard at all. If you look at your volume and you look at the past 5 days, you better have a lot more buyers, green bars than red. And then if you really want to see how healthy the stock is, go back 10 days and take a look out of the 10 days, how many of those stocks, those bars, are green compared to red. So people are jumping out of the bank stocks with an uptrend, and they're buying these damn tech stocks again with a downtrend. They just don't learn their lesson. So if you look at Target, look how nice Target's doing. Got a nice trend. But what's happened in the last couple of days? They're pulling money out. Well, where's that money going? Well, it's going back to the Qs. Are they nuts? You got more sellers. They just come back 5 days. You got more sellers than buyers. They don't care. They're jumping in. ARK. Look at it. They're jumping into ARK today. So you have to ask yourself, why on earth are they now getting out of McDonald's with a beautiful uptrend and they're jumping back into ARK? It's in a downtrend. People keep buying these stocks in a downtrend. They think they're getting a deal. Oh, the stock was at 92, now it's 40. I got a deal. No, you don't. Because from 42 to 90, you got all these sellers you got to get up through. And the big thing people don't understand is the institutional money, the smart money, have pulling out of these stocks over the concern of their debt. Companies are spending tens of hundreds of billions of dollars on data centers.
1 minute.
The increase in AI debt in just 12 months, again, went from $15 billion to $125 billion. But they're jumping out of stocks that have relative strength, that were going up when the market was going down, and they're going back to downtrending, overpriced stocks. This is just crazy. Let's see, PLTR. Okay, I got the right one here. I think it was PLTR. Got the right one? Yeah, PLTR. Okay, so PLTR, take a look at this one. This is a real, everybody buys this stock. Now, the only decent thing about this stock, its setup is a little more positive, and it's turned green. But people that are taking their chances and dumping out of these discretionary stocks and they're going into these tech stocks again are nuts. All right. Remember, your only protection is learn how to sell short.
Listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.